Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD has been rallying steadily against the major currencies since last Wednesday, although it's unclear what has been behind the move. From the monetary policy perspective, nothing has changed as the market continues to expect at least two rate cuts by the end of the year and sees some chances of a back to back cut in November. The data continues to suggest that the US economy remains resilient, with inflation slowly falling back to target. Overall, this should continue to support the soft landing narrative and be positive for the sentiment. The new driver could be Trump, now looking more and more like a potential winner, and his policies are seen as inflationary, which could see the Fed eventually going even more slowly on rate cuts. The JPY has been another winner recently as the yen strengthened against all the major currencies. The intervention and the breakout of a key trend line in USD JPY did help, but fundamentally it doesn't have much support. It might be some positioning into a potential BOJ rate hike next week, or just some profit taken. In the big picture, the JPY in this environment should remain in a downtrend. The yen will likely need weak US growth data to see some sustained strength on recessionary fears and more aggressive rate cuts expectations. But as long as we have stable global growth and generally positive risk sentiment, the main trend is unlikely to reverse. Now, on the daily chart, we can see that USD JPY retested this key trend line around the 158 level and eventually continued to move lower. For now, the sellers remain in control and will likely look for an extension to the 152 handle here. The buyers, on the other hand, will likely need a catalyst or some signs of a change in momentum on the lower timeframes before piling back in. On the 4-hour chart, we can see that from a risk management perspective, the sellers will have a better risk to reward setup around this downward trend line. The buyers, on the other hand, will want to see the price breaking above this trend line to gain some control and start targeting new highs. On the 1-hour chart, we can see that we have another minor trend line here, defining this bearish momentum. If we get a pullback into it, we can expect the sellers to lean on it to position for a drop into new lows. The buyers, on the other hand, will want to see the price breaking above the trend line to start piling in for a rally into this next major trend line. These red lines define the average daily range for today. For the upcoming catalysts, today we have the US/PMIs. Tomorrow we will get the latest US jobless claims figures. And finally, on Friday, we conclude the week with the Tokyo CPI and the USPC reports.